So my idea is, you can see there long term where we are. We got this trend line. This is the 4-hour chart. Looking at the 4-hour there, you can see that we hit the trend line on the 4-hour chart. Number one, yesterday, that wasn't yesterday, I think it was the previous day. Oh, it was yesterday. We woke up in the morning, we took this first buy, and it was basically it was the first attempt to go up to the top from this retest of this trend line. That failed. The market later dropped 400 pips back down below, breaking below this trend line. But then this morning again looks like we're going up for another test. So in that case, it's simply just it's created a double bottom. Sorry. So when something like this happens, guys, there's really nothing. There's no way of knowing that the market was going to create a double bottom. What would have happened here is that you'd have, if you were holding, you would have had to take this trade, and most likely, if you didn't get out before this drop here, you would have actually, if you got in here maybe for the for this first leg, expecting it to go all the way up, you would have most probably the price would have came back and hit your entry, because it was creating this double bottom. Now this double bottom you can't predict until it actually happens. It has to happen, and then you know, oh, it's a double bottom, let me try again, and then you go back for the second attempt. So like it happened here, we're going back for the second attempt now. If you are looking to ride this entire move back to the top, because that's where it's most likely going. Remember that the main trend is back to the is to the upside. If we look at it long term, let's have a look at it long term there. This is the daily chart. You can see that it's an uptrend. So now back to the 1 hour. So now since that it's created this double bottom, and it's going back in the main direction of the main trend. So now we can assume that it's most likely going to go higher past the resistance. But now, firstly, we've got two other resistances before we hit the main one at the top. So we firstly need to get past this one here, and then we need to get past the second one, and then from there we have a breakout for higher prices. So that's why I said the first target is this 400 pip target here, which we should reach by the end of the day today. This is 350. We're already about 50 pips in profit. I got in here. The last entry was around there. So that's full 400 pips. That's the one I sent. And then if you want to hold for more, which is possible depending on what it does here. If it gets to this level here and it doesn't show any signs of turning, then you can hold for more. Then you can hold for the full the 1,000 pips here. Then take it all the way to the top, depending on what it does when it gets here. So my idea is, when it gets to the top here, I'm most likely not going to take profit. I'm going to watch and check the price action. If I see any sign of it turning or something like that going down, then I'll close, and then later wait for a breakout from the top here, and then look to buy for the second part of the trade. But the first part is what's happening now. And then from there I'll see what happens there, and then you can take it further if the price action doesn't show any sign of continuation. So that would be the plan at this stage, for the rest of the day and tomorrow, I guess. I think it's really most likely going to continue all the way up to the top there, but let's wait and see. Let's not predict. Work with what the market gives you. That way you stay safe. You stay safe. You don't predict. You don't wanna be right, and all of your emotions are always going to be out of the way if you just deal with what the market gives you. because now you're going to be forced to obey and look at your charts and read your charts and not necessarily predict, because once you predict, then what's going to happen is that you're going to want to be right. Naturally, as human beings, nobody wants to be wrong. You want to be right, and you're most likely going to impose your own thoughts to say this is what's going to happen, and the market doesn't care whether that's what you think is going to happen. It's going to do its own thing. So it's better to just follow the market rather than predict the market. So that's why I always say I look at the market, and then I'll look at it and I'll say, okay, what is it doing? And then I'll deal with what it's doing, not necessarily what I think it's going to do. So I think that puts you at a better psychological state. You're going to be a lot more stronger psychologically than the guy that's actually trying to predict the whole thing. So that's just my view. I think it seems to be working for me. So you can also try to use something like that. See if it will work for you. Did any of you guys catch the entry this morning? That's a little bit of a closer look at the entry on the 1 minute. And then right now I've just got my alert there to let me know if it's turning or if it's gonna continue to move in my direction. So at this stage things are looking good. Still got a long way to go, so probably gonna hold this for the whole day, depending on what the price action does. Like if the price action continues to move positively like it is, I'm just gonna sit and monitor the entire day until we hit this first target here. And then that's going to be the first place where I'm going to be expecting some sort of trouble. And then from there, the main decision will have to be made whether we're holding or we're going higher. And then at that stage, you can only hold for the second part, which is the full 1,000 pips. So nobody knows what's going to happen. Just work with what the market gives you. If you get paid the full 1,000, good, well done. If we don't, take what the market gives you. Does it make sense, guys? Got kicked out twice on the first one, but managed to catch the second one. Okay, nice. But we didn't get kicked out. Did you get my signal, or were you late on the entry? Because with our signal, it didn't even pull back 10 pips. It just went straight in and went straight up. Wait, let's see. Did it pull back? No, it didn't. It didn't pull back. It went straight in. Not even 5 pips it pulled back. Okay, so guys managed to get in. It's moving, it's taking off. But right now it's a bit late, guys. To enter now, the price is a bit high. A pullback can happen at any time. So if you're getting in now, it's a bit of a gamble, because you might be, if the pullback comes now, you might get caught in the middle of that pullback. But if it doesn't, then you'll be lucky. If the pullback happens at a higher price, then at least then you might not get affected. But it is a bit late at this stage. It is a bit late. But you can get back in. You can get in. It's just that it's a lot safer to get in as the price is taking off rather than once the price has already taken off. Because now you're exposed. You're definitely going to be exposed. Any pullback that comes after that is either going to go down to your stop loss, or you're going to sit in the red. While we're sitting still in blue, you're going to be sitting in red and panicking. And it's only because you got in late. But it seems to be going strong. It's going strong so far. I mean, it's only been the first hour, and already already we're up about 63 pips within the first hour, so that's quite a strong positive move. Very positive. This is a great take. Take what the market gives you. Yeah, I strongly believe in that. I strongly believe in that. It's a lot better to deal with what the conditions, because trading needs to be looked at as a survival game. It's a survival game. It's not. It's all about, yeah. It's a survival, because the chances are you it's not made for us to survive anyways. You're supposed to lose. You're not supposed to win. So in a game like that, how do you expect to make money? So the only way that you're going to be able to make money is, number one, you need to make sure that you survive. So if you can survive first, focus on surviving first, and then the money will come later on. So survive first, make sure you're managing your risk properly, you're taking the right trades. Taking quality trades is important, because the market buys all day long, guys. The market can buy all day long, it can sell all day long. There's trades happening every single minute, every single second. There's a potential trade starting. There's movement every single minute. So every single buy and sell that you see on the market is valid. But the problem is, the quality of those buys and sells are not the same, and that's what you need to now filter out, to say, okay, which ones are the real ones, which ones are the fake ones, which are the big ones, which are the small ones. Now those are the filters that you use. But if you look at every single trader across the globe, we're all looking at the same market. We're all looking at the same market, and a buy is a buy, guys. If the market is going to go up, we're all looking at and seeing the same thing. But the only difference is what separates me from the next guy and the next guy and the next guy, which then like separates us and says this guy is a better trader than this guy, is our filters. That's the only thing, is our filters. But the buy is a buy. Now the problem is, what reasons did you use to filter out and find that particular buy, which became the big winner? So a lot of the time is that when you start off as a trader, you're taking every single buy that you can spot, or every single trade that you can spot. And that's why you get caught up with the fake ones, you get caught up with the weak ones, you get caught up with the traps, and all of those things. Now you need to find filters to filter out all of that noise and make sure that you're finding quality. Now the best traders out there that you see them doing well with this thing, they have found those filters. And those are the filters that traders need to find. So find out what those filters are. What are these guys using to find those quality trades, like the one that I've just showed now? Because that is exactly what you need. And then once you can filter out the bad trades and the good trades and the best trades, then you're on the right track. So find those filters. And the filters are anything, guys. People are using Fibonacci, people are using support and resistance, people are using trend lines, people are using EMAs like me. There's so many. Those are things that we call strategies. Those are filters are strategies, basically. It's a strategy. It's something that's telling you this market is going up, this market is going down. It's not what I think the market is doing. This has got nothing to do with me thinking that today I think Nasdaq or VIX is going to go up 100 pips. I don't think here. I look at the market, I apply my rules, and then the rules will tell me where this thing is going. Is it going to go up or is it going to go down? And then if the strategy tells me that this thing is going up, I follow that. I don't now say, yeah, but yesterday it went up 200 pips, so I don't think it's going to go up 200 pips today. I don't care. I don't think I follow the rules, and the rules will most likely lead me in the best direction, and that's all that I do all day long. So eliminate thinking, and then follow what the market is doing. Then everything else will fall into place. As long as you have a strategy that gives you quality trades and filters all of the noise. Because really, that's the difference between good traders and bad traders. You look at another trader, and that's the thing. I spoke to another guy a couple of months ago. he was complaining about, I think it was last year, August. I remember August was a very bad month on Nasdaq, and he was complaining and saying the signals were bad and this and that. And then I said to him one thing. I said to him, okay, if you say my signals are bad and there's other traders that are doing well, I said, okay, today is a bad day on Nasdaq. Go and find me a trader that's posting profits and then send me a screenshot of their profits. And he couldn't find one. He couldn't find a single trader. And then I said to him, you know why? Because we see the same thing. Whether Zakes or whoever, which other guy that's doing well in trading on Insta or anywhere around the world, if he sees a buy, I'm definitely seeing the same buy. If I know what I'm doing, I'm seeing the same thing. Now the difference is, will the market really buy? And now when I say the market is bad, I mean there's times where the market will tell us buy. But now when you're reading it, you can see this is a clear buy. The same buy that I took yesterday is happening today, but I'm not winning. Why am I not winning? Because the market still needs to move. Whether or not I get the signal or not, the market is the one who's going to dictate to say, I am moving and I'm going to pay you. Because how we generate money is the number of pips the market moves versus your lot size. So now, if I buy and then the market moves 10 pips and reverses and hits my stop loss, I'm not the one that's losing. I'm losing here, but so is the next guy who's also seeing the same buy. So Zakes is also losing. Whoever else is also losing. Whoever else, we're all losing. So that's why I said to him, today is a bad day on Nasdaq. Go and find me a trader that's making money today. And he couldn't find one. And that's why when we post, we all posting. And when we don't post, nobody posts, because we're all looking at the same thing. We're all trading the same market. And when we lose, we all lose. When we win, we all win. Now, that's the difference now. Our filters, we're not using the same filters, but then our filters work. So if he's using whatever filter that he's using, it's working for him. I'm using my filter that's working for me. But at the end of the day, that filter is the same thing that gets us into the same buy. So whether or not he's using a software or he's using pure price action and I'm using EMAs or another guy is using that, but at the end of the day, we're seeing the same particular buy. So when we all win, we all win. When we all lose, we all lose. Now, what you then need to do is now get yourself to the other side of the picture now, because how is it that when we all win, we all winning at the same time, yet we don't speak to each other, we don't know each other, but we're seeing the same picture? But everybody else that's losing is all losing. So what are you guys missing on the other side that you need to get to know to get onto the other side, that when we all win, you're all winning with us? Because there's something that we know. So it's those filters that you need to now find from those guys. Is that now, okay, what are these guys doing that I'm not doing? What do they see that we're not seeing? So it's really not about who's right, who's wrong. It's about filters, guys, filters. That's why I'm trying to explain that it's not about who's good or who's bad. There's no trader that's good or bad. It's all about filters. What are you using to get you in and out of the market? Is your strategy good? That's all it is. Is your strategy good? It's not who's good, and nobody's good or bad. It's the strategy that tells you. It's those filters that are able to get you in and out of the market. So what are you using? This is the pullback I was referring to earlier on. It's happening. And I said, if you enter now, it's a bit late. You can get caught with the pullback. That's what's happening now. And because we got in early, we're still in profit, yet the pullback is happening. So for the guys that got in a bit late, they're sitting in the red now. So timing is very important. It actually, if you can time your buys perfectly and you get in as they begin, then the stress is gone. Because if you can get it right, and if it's a real buy, there's not even a need for a stop loss, because at that stage it should be like it's either the market starts with the buy and it takes off. If you get in at that stage, then the market is really not even gonna go down to your stop loss. You don't even need. That's why I'm able to. The strategy is able to get you into the market even with a 15 pip stop loss or 20 pip stop loss on VIX. Now that's crazy if you think about it, because VIX, it moves very, very fast. It's very volatile. But if you can narrow your buys down to the T, and you can really like separate them, get to a point where you can separate the buys and the sell right down to the last candle, the very last 1 minute candle, then you've narrowed it down to the T. And then at that stage, it's between the buy failing or the buy winning. And then if it fails, then that 20 pip stop loss is enough to get you out. Then you know, no, it was never going to go up. But at that stage, if it goes up, then there's no, even the 20 pip is too much, because it just moves from that point and it just goes into profit and continues straight up. And then from there, your risk reward ratio will always be crazy, because if you are able to get in with a 20 pip stop loss into a trade, but in every single time you're extracting at least 100 pips and more, then you're always going to be in profit. Because now that's like a 1:5 risk reward ratio, and that's going to keep you in the game for long, guys, for long. And if you check out my like a lot of the profits that I've been posting, is that the market is not even going 100 pips, it's going 200 pips. It's going, VIX moves, guys. It really moves. It moves 200 pips like nothing. So now if you're using a 20 pip stop versus a 200 pip target, that's a 1:10 risk reward ratio. That's always going to keep you in the game. You can't run out of cash in that type of situation. And you'll see it on Instagram. You'll see what the strategy is able to produce there. There's times where I've been posting like the whole of last week. It's been just moving $20 account straight to 200, $20 straight to 200, 20, and that's just straight 1:10, 1:10, 1:10, 1:10 every single time. So strategy that can produce 1:10 consistently. If you don't believe me, check my Insta. I'll show the dates there. You can look at the dates on Instagram, look at the dates on the chart, and then you'll see everything. Or if you don't believe me, look at the price as well. Look at the price on the right and look where I'll be posting it at the top, and then you'll see if I'm telling the truth. That's always going to be 200 pips that I'm closing. And VIX is one instrument that can produce 200 pips daily. Don't believe me? Go check out what VIX is doing. I'll show you. Wait, let me just show you guys quickly. VIX is able to move 200 pips daily, guys. All you need to do is just make sure. Now this is the daily, right? I'm just gonna measure the highs and the lows. Never mind the wicks. Now this was 290 pips there, 292 pips there. That was one day. There's another one there. That was 137 there. That was yesterday. Today so far we've moved 187, and the day hasn't even started. Just measure. I wanna just measure all of the all of the daily candles that you see on VIX, and just from highs to the lows, just the bodies, never mind the wicks, just the bodies, and then you'll see how far VIX can travel in a day. and then you'll see that 200 pips is reasonable. It seems like it's a lot, but it's reasonable. VIX can produce 200 pips daily. Now all you need to do, make sure you're on the right side of the 200 pips. Don't get onto the wrong side. Make sure you get onto the right side. And if you can't get onto the right side, or you don't know how to find the right side, that's why you then need to get my strategy, because it will always get you onto the correct side of the market. And then from there, it's just you and the market. It's either you get into the trade and then you're holding for the full 200 pips, or you're holding for 100 pips, depending on whatever target that you want. But I've always been encouraging the guys, and the guys that I've been coaching, is that VIX can produce 200 pips. If you're just patient and you ignore the noise and everything, and you are able to read it properly as well. And like what I was saying, is that you need to be able to take what the market gives you, because it's not every day where it's going to give you the 200 pips. You need to read it. And there's days where it will tell you that, okay, I'm moving 200 pips. You need to obey it and hold. And then there's days where it's going to tell you that, no, I'm not going to move that 200 pips. I'm only going 100 pips. You need to obey and close, and not actually hold on to a trade hoping that it's going to turn and eventually end up losing all of your profits, because you're hoping that it's going to go. So it's important to deal with what the market is giving you and be able to read it. That's the trick. Be able to read it and know exactly where it's going. So the strategy is powerful. It's powerful. Risk reward ratio. Number one, remember, you need three things, guys. You need a good strategy, good mindset, and money management. And then the other thing that you need is good conditions. Good conditions need to be there, because none of this can happen. You can have a good strategy, good mindset, good everything, but the conditions are bad on VIX, and there's nothing you're gonna do. You're not gonna make money if conditions are bad. So you need conditions to be there as well. You definitely need conditions. That's the other thing that we overlook a lot of the time. We think we can make money every day, any day, and it's not like that, guys. It's not like that. There's good days, there's bad days, there's better days. Days are not the same. So conditions are also important. Conditions are also important. So today, so far, it's looking like it's a good day. I'll show you guys what I mean about conditions. Because it's so easy to trade on a good day. I'll show you guys quickly what I'm trying to explain here regarding conditions. Okay, this is the 15-minute. I'm just gonna show you guys the type of things that you want to deal with as a trader. Okay, let's remove all of this. So remember, as a trader, you want good conditions. You don't want to be dealing in a market where there's no trends and it's difficult to predict and all of that. You want a market that's consistent. Number one, it needs to be consistent. It needs to be persistent in one particular direction. There's no greater headache than trading a market that's doing this, guys. This is a headache, because there's no consistency, there's no persistence there. What it's doing is just going up, down, up, down, up, down, up, down, up, down. And if you're buying and selling in this type of condition, you're gonna buy, then it's gonna come down, hit your stop loss, sell, hit your stop loss. It's noise, it's chaos. This is what we want. This is how we make our money as traders. It's constant and it's persistent in one particular direction. It's going down. That's what you want. As a trader, this is what you want. These are the conditions that I'm talking about. It's constant, it's persistent in one particular direction. As a trader, this year you don't want. There's no consistency, there's no persistence, It's two particular directions here. It's going up, it's coming down. It's going up, it's coming down. You hate this as a trader. This is what we want. Consistency, persistence in one particular direction. Doesn't matter which direction, as long as it's direction, guys. So conditions are important in this particular case. I don't care who you are, what you do, what strategy you have. You are definitely going to have more trouble trading this particular day compared to the guy that's trading this particular day. Which is easier to deal with? Do you want to deal with this day or do you want to deal with this day? So, do you want to deal with that as a trader or do you want to deal with that? I think everybody wants to deal with this. It's a lot easier, guys. There's a lot more stress. Plus, all you're going to be seeing here is blue, 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 blue. Your screen is just going to be blue here. But here it's going to be blue, then it turns red, then it turns blue, then it turns red. That's why I don't like scalping, number one. I don't like doing this thing where people draw channels and then they try and buy and they sell in between. Don't do that stuff, guys. Don't do that. That's going to kill you. This buying and selling low, don't do that stuff. Be a trend follower. Follow the trend. Causes FX strategy is a trend following strategy. You will never ever see me doing this, trading something like this. If you look at my Insta, the market will either be going strongly hard like this, persisting in one direction, or the market will be going down in one particular day. All of my screenshots, all of the profits that are posted, it will be happening because the market is trending in one particular direction. So don't scalp, don't trade a trending market. Look for markets that are trending and they are not choppy. This is choppy. The market will chow you in days like this. Avoid this, guys. It will chow you. Wait for this. This is what you want. This here, that's what you want. If you look, the last signal that I sent was around 2000 last night, I think, before all of this noise happened. The first signal that was sent was where all of the noise ended, and then the market was trending again. So know when to apply your strategy, know when to stop applying your strategy. So conditions are important. And then once you know when to trade and not to trade, now make sure you have the right mindset. Because now you know what to do. But now if you have bad mindset, it's a waste of time. Because now if you're not patient in order to wait for these type of opportunities, your mindset is just gonna keep on letting you down. If you're greedy, your mindset is letting you down. If you're not positive and you are a negative type of trader who thinks nothing is ever going to work out, who's holding a trade and keeps thinking it's going to lose, it's going to turn, and meanwhile it's a big winner and they quickly close it, you're not going to make money as that type of person. As a trader, you need to be positive, and that's what a lot of people struggle with. A lot of people can be actually good traders, but now their negativity is what lets them down. Because they'll be holding a trade like this, which has huge potential to pay more than 600 pips, but then they get out for 100 pips. Now, what does 100 pips help you with when you want to make money? Yes, you've made something, but you didn't utilize the full opportunity to exactly what it was worth. Now, you're looking at an entry like this. Yes, you've made money. You've made what? Maybe you might say I've made 46 pips. But the market really has potential to go another 400 pips. And while and the thing is, you're already in the entry already, and you're already in profit. Now all you need to do at this stage is just watch it and wait and wait and wait. Because number one, you're with the main direction, which is the daily side, which is the main direction. Number two, you've waited for the consolidation to finish, and after every consolidation, a rally will happen, guys. A rally must happen. Here was consolidation here. What happened after that? Massive drop. A rally. Whether it's going whether it's going up or down, something will happen. There's a move there. So after a lot of noise or anything like that, something massive is gonna happen. Whether it's going up or down, something is most likely going to happen. So focus on that and be positive and saying, okay, I don't know what's gonna happen. I don't know where this thing is going, but then I need to be positive and follow the main direction. And if you're with the main direction, then you just need to hold and follow the market. And as long as the price action keeps telling you that it's going up, why do you fear? So mindset is important. Capital is also important. So far so good. So far so good. Some traders will put a trend line like this. The market will be still moving above the trend line. Now, provided that this market is moving above this trend line, what reason do you have to close this trade? Because let's say now this market continues to do this, then it comes crashing down, but doesn't cross the trend line, then goes up, then comes crashing down hard, like that. Now there's traders that are going to close the trade somewhere while it's crashing down like this. But it doesn't necessarily mean that the trade is losing. Yes, it's crashing down, but it's doing what every market is supposed to do. A market must go up, it must pull back, then it must extend. It must come down, then extend. So to close a trade while you're still in profit and while it's still moving with the natural movement of a market, because it's still giving you higher highs and higher lows. So there's really not much reason for you to close this particular trade. So the only thing that will make you close this trade is fear. The fear of losing what you've already made just because you see this drop. Now other traders, professional traders, take advantage of this drop. While the market is going down like this, like this, like this, at this stage here, they're waiting to take an entry and buy more. So while other traders, fearful traders are closing and closing and closing, the other guys are waiting to take another entry to go higher. So this one here is still in the game and he's adding more and he's making more money. By the end of the day, you find that this guy has got blue screens with maybe 10 entries just because he was buying all of these pullbacks, and by the time it got to the top, he had already like tripled his account. But the other guy probably doesn't have anything, because what he's trying to do, he's trying to get in and out, in and out, in and out, and he's putting himself in more risk by doing that. Because if you just bought once here and held, there's no risk involved. But now trying to go in and out, in and out, in and out, hey, now you're most likely gonna make some mistakes and then get caught with some bad entry and your stop gets hit and all of those things. So sometimes it's best to always find one good entry and hold it, and then it's gonna make you all of this money just by holding, rather than the guy that's going in and out, in and out, in and out. And there was really no need for him to go in and out because everything is happening above this trend line. Only time you should fear and maybe consider closing your trade is once it gets below here. Then you can now say, this thing doesn't look like it's gonna go up anymore. So that's how you should look at the market, and you should read it objectively. And that is something like this is what should dictate whether you are closing or you're staying in the trade, not your emotions or looking at the amount of money that you've made. Because if you're making decisions based off of the money that you've made or lost, then you're always going to have trouble in trading, because that doesn't work. Nobody wants to lose. So every time you see red, you're always going to want to close. Then you'll never make money like that. It's the market that should dictate. Let's see. I just want to take this time to appreciate you, Mr. T, your patience and consistency in teaching us all these. I'm truly grateful and looking forward to making more money. The future is promising. Thank you, thank you, thank you. Thank you for believing as well. We're definitely going to make more money, guys. That's for sure. you're definitely gonna make more money. Ranging market is a headache. It is safe to go for trending markets. Absolutely, trending markets are the best, guys. They're the easiest, in fact. Because once the market is trending, guys, you're basically just focusing. It's one direction that you're dealing with. So there's less to worry about when the market is trending. But when it's ranging, you're gonna be in trouble. Strategy lesson for today. I'll just send out a poll there. Just vote for the best time for you. I don't mind. I'm not really busy today, so I've actually dedicated my day to trading today. I see it's gonna be a nice day, so I don't wanna be out somewhere and possibly miss this good opportunity. So I'm home the whole day, guys. So we can do it at any time. Either way, whether I'm doing the training session with you guys or I'm trading, I'm going to be in front of my computer. So any time of the day for me is fine. I'm gonna be in front of my computer all day anyway. So I don't wanna miss out on this 1,000 pip opportunity. So I'm not gonna be moving. I'm not going anywhere. If this has to move 1,000 pips, I'm definitely gonna have to extract, guys. So we're working. It's a Saturday, I know, but this I'm not going to miss. It's 1,000 pips, guys. We're talking 1,000 pips here up for grabs. Now, do you wanna be out somewhere at a mall spending money, or do you rather wanna sit here and make sure from that 1,000 pips you at least get 700? I'm looking to catch at least 700 out of this gap here. At least 700 pips must be extracted from this move, if it works out. If it doesn't work out, it's fine. But if it works out, I will kill myself if I don't extract the full 700 or the full 1,000, because I saw it happen. It's happening right in front of me. So how can I not extract? So that's why I say mindset is important. If you're seeing something and you can already see how it's gonna play out, there's no worse thing than seeing something and planning for it, and then the next thing, somewhere, somehow, your mindset, you just decide to close the trade for no reason, or fear just comes in and then you close the trade. Meanwhile, you saw that it was going to go all the way up to the top here, and somehow you just decided to close. So that needs to be eliminated. You need to have a strong mindset. If you have a plan, stick to it. No chopping and changing. Stick to the plan. See it through. And if you do change, let it be an objective reason, not because of your emotions. It has to be the market telling you, no, close. I'm not going to move 1,000 pips. So you must have reasons. Like I just explained, where I said the trend line break here should be, this is an objective reason enough for you to say, this thing is not going to go up. So if you see something like that, if you're holding a buy and then all of a sudden you see a trend line break like that, that's an objective reason for you to close, because now it doesn't make sense for you to hold on to a trade that has just broken a trend line. It's almost like it's telling you that I'm going down. Now you're gonna hold on to it. You basically, like, there's no evidence to hold on to a market that's falling like that. But if it's still moving above here, there's no evidence for you to close it either, because everything is moving with you. It's going up. So don't be a slave to your emotions. Read the market, follow the market, and trade the market, and then stick to the plan. And sometimes, guys, sticking to the plan does work against you. There will be times where it will work, there will be times where it won't work. So you still need to deal with that as well as a trader. You'll stick to a plan and it didn't work, and there's nothing you can do. I always say I'd rather lose while sticking to a plan or following my rules than to lose because I took a gamble or I took a chance. So rather lose because you did everything right, and the market was the one that decided not to pay. So in that case, that is what we deal with as traders. That's normal, but not because I wasn't disciplined or I messed up or I made the wrong choice or I wasn't patient and I jumped the gun. You know, those are trader errors. Let's chow VIX, guys. Let's chow, bro. I'm also in the buy. VIX 75 is my blesser. Yeah, it's definitely gonna pay today. You know, if this buy plays out, guys, it's gonna pay big bucks. 1,000 pip opportunity, but never mind even the 1,000 pip opportunity. The first target is just 400 pips. You know, that's still good enough. We've done about 50 pips already. We got 350 to go now. So, and this is nothing. We did that same 350 on, when was it? Yesterday. Yeah, this was yesterday. We did 350 there. So what's gonna stop us from doing another 350 here? Nothing. And I'm saying we're gonna go the full 1,000. So the first target is 350, second target is all the way up. You can see there it's looking like it's giving us a nice double bottom there. So things are looking good, positive. It's looking nice. Let's see how it works out, guys. Let's see how it works out. The guys in VIP, we will do the class today. I'll just vote for the best time for you. But it's basically going to be everything that I've explained right now. But maybe into more detail and how to re-enter, because there's going to be more opportunities to add more entries. So I'm going to be looking for more entries. So I'll be explaining exactly how we're going to take the next set of entries. This is just the first. We should get more entries somewhere around here, or maybe even now. If the new entries come, I will send the new signals. But yeah, I guess the training today will be basically what I've covered now as the background. But then I'll go deeper into the price action, because this is just general knowledge. I think everybody should be able to see this. So that's why I don't mind actually explaining it. And then I'll get into like the real entries with the VIP guys, and how to find these the filters that I was talking about. I'll get into those filters as well. That's really what's going to separate all these buys and sells for you, so you can catch these big moves here. These big moves here, because a lot of people they get lost here. People lose money here, and then they lose, and then once they've accounts are blown, and they most probably give up, and then they could see that this market was going to sell, but now because they don't know when it's going to do it, or the timing is wrong, and they end up getting caught in all of these traps, because these are traps. These are all traps here. All of this bad action, this consolidation, it's all to wash out all of the traders before you see this massive moves. You know, so it's all of this is just created to manipulate, to trap people, to trap buyers. Where the market, it looks like it's gonna buy, then people are gonna buy. There's a lot of people that got trapped here, thinking the market is going up, then it collapsed, boom, then they chowed, and then the sellers thought, oh, okay, no, it's going down, and then they bought, then boom, they got chowed as well, then it went up. Shortly after that, then the buyers thought, oh, we back in the game, and then they got chowed as well, boom. Then the buyers, you know, so this is just traps until this real move happens here. By that time, all of the new guys, all the beginners are out. They're gone. Accounts are blown, finished. And then the real guys make money. The professionals chowing here. Then we send screenshots. So I've just showed you guys what to try and avoid getting, you know, caught up in here, and have filters that can tell you that this is not the best time. Filters that can help you find these big moves. If you can find those filters, or find strategies that can filter out all of those type of noise, then you're good. But my strategy is one. You guys see me posting every day. I do this daily with the VIP guys as well. They also catching these buys even without me sending signals so far. So they clearly understanding it. Which time frame is that? I don't know. I've gone through so many time frames. Thank you so much, Iskosi. Since I've joined your group, my trading has improved a lot. Thank you, Ziwe. Okay, if you understand the more market phases, then you're good to go. That's true, yes. That's very important. But yeah, things are looking good. Like I said, I'm not moving, guys. We need to enter more trades. Number one, we need to, make sure that this opportunity is fully utilized. This is 1,000 pips opportunity, guys. You can't take out 100 pips and leave 900 on the table. Can't. The market offers 900 pips. At least go for 700. 7 must end up in your pocket, guys. So I'm not moving. I need at least 700 from this opportunity, and it's going. It's just going, guys. Watch it go. Come on, baby. Come on. This is it, guys. It's going. The guys that I hope the guys didn't get caught with the late entries that I mentioned. They didn't get caught with this pullback. But the pullback is finished now, so it's taking off now. First target, up here. 400 pips. Second target, all the way up. 1,000 pips. Let's see how it works out, guys. Questions? Anybody got questions? The opportunities are there, guys. Every single day we get these opportunities. You just need to know how to get in and out every single day. If you have a strategy that's able to get you in and out of the market daily, without being detected. That's how I look at it and say, you need to be able to get in and out of the market without being detected. So that's like, being detected is you stop getting hit. You must be able to get in, extract money, and get out daily. So it's a very skillful game, but it's a game in the end. It's a game. If you look at it as a game, it becomes a lot more easier, guys. Put your emotions aside, put money aside, and look at this thing as a game. Because that's exactly what it is. It's just a game. I've been teaching this to my son. He's 8 years old, and all that I told him is that this is a game. I never told him it was money. I just said this is a game. Just see what's the biggest score you can get. And all he's doing is just applying the rules, and he doesn't realize what he knows, because this is just about identifying patterns. Even an 8-year-old can understand this. As long as you can identify patterns and you can see whether the market is going up or down, that's it. And then focus on increasing your score. That's all it is. If you have that type of mentality, then you're good to go. So for a person like him at 8 years old, and he doesn't even realize that this is real money. He's got no emotions attached to this thing. He's just doing it. So by the time he hits 2021, he's going to have so much experience, and and all he thinks is it's just a game. And maybe at that stage, that's when the fear will hit him and say, hey, this is real money. But it will be too late by then, because he'll be so comfortable with it that it doesn't scare him anymore. And that's the thing with us adults, because we know the value of money, we know what it can do for us and how it can impact our lives. That's how the fear gets into our under our skin, and it ends up affecting our our psychology and how we think as traders. So, while if you can step back and get out of that frame of mind of knowing the importance of money and really treat it like a game, then you'll see. And that's why a lot of people have such a high success rate on a demo account, but then when they get to a real account, it's different. But if you look at it, it's the same market. Nothing is different. The only thing that changes is you. The fact that you're now dealing with a demo, with real money versus a demo. That's what changes. When it was a demo, you were able to hold and let the market run, let your winners run. You do that on a demo, but when you get onto a real account, the market can barely move 50 pips before you close the trade. So how are you then gonna make money? Because in order for a trader to make money, you need the market to move. It needs to generate those pips. It needs to move from one point to another. So if you're getting in with a good lot size, but then you're cutting it short for 50 pips, it defeats the purpose. Because the whole purpose is to get in with a good lot size and let it run, so that you can fully extract the full 1,000 pips that was offered, not 100 pips from a 1,000 pip gap. Because then you've messed up the opportunity. You had a 1,000 pip opportunity and you took out 100. That to me looks like you've wasted it. Complete waste. Yes, I send signals via Telegram. All my signals via Telegram. When is VIX 75 more active? There's no time, guys. Everything is random here. Everything is random. There's no particular time. The market moves, and especially VIX, because VIX is something that doesn't even exist, guys. This year is pure buyers and sellers. It's not like Nasdaq and all of these things. Those things can be manipulated. Trump can say something, and then that will definitely move the price somewhere. Here, there's no news. There's nothing. So it's just pure price. So there's no active time. If there's more sellers, then the market will move up. If there's more buyers, then the market will move. It's exactly that. I think there's in my view there's more influence or manipulation from the other markets, because the news is one form of influence to either drive the price up or down. But yeah, because there's no news, there's no nothing. It's purely what's driving the price up or down is the buyers and the sellers. So which makes it difficult to predict the time or whatever, because it's really just random like that. Okay, I'm also resting in my room, curtain closed, making dollars today. Yep. There's no greater feeling than, locking yourself up in the house and you're making money. That's nice. And nobody knows. Like, you're sitting at home. Your neighbors don't even know. All they see is that this guy is always home. He doesn't work, he doesn't do anything, but his life is continuing. And that's the good thing. The only people that know about me are the guys on the internet. The people that are like right next to me here wouldn't even know that I'm trading. So that's the nice thing about what we do. You get to do what you want in your own space, in your own privacy, and nobody will know about it. You could be driving a Lamborghini day in and day out, and people won't even know what you do, how you get it. Meanwhile, they see you always home. So third hour now, still moving nice and strong. Still moving nice and strong. So let's see how it goes. Let's see how it goes. That's a sad strong, huh? That's strong. Just green candles back to back. That's what we need. That's what we need. Yeah. I think we might see a pullback. We might see a pullback, another one soon, maybe. Okay. But I think we should hit this target today. The way that it's going, I think in the next 4 to 5 hours we should be at the top. Yeah, we should be there. We should be there. Slept well. Good morning. Oh, God damn, forgive me now. 4 o'clock I was up. It's a good thing on Nabila Sambers. I would have missed this entry. And it's cold. Mind, you know? Yeah. Guys, let's continue to monitor this one, see how it goes. Let's monitor it, see how it goes. Yeah, it's looking positive. I'll do the training now, and then I'll let you guys know exactly how to take the re-entries and add more in the VIP training today. And then yeah, we'll take it from there. But for now, I'm just gonna monitor these and wait for another re-entry. I'm enjoying this live because it's aligning with what I'm also doing. Yeah, totally. T-Man, I like the setup where there's commentary while trading. Yeah, we should do this a lot more often. Yes, I should actually do this a lot more often. Yeah, I'll definitely be doing a lot more of this. Especially, yeah, when we got time. So thanks, guys. Thanks for joining. I'll send another message when we go live again. And then
when something is happening, because right now it's going well. So something happens or something that needs to be discussed, I'll let you guys know, and then we'll do it again. Thanks for joining. Cheers, guys.